All right, is this working? Can anyone hear me? Give me a thumbs up in the chat. We're also live on Zoom. We're on YouTube, private show. Hi to YouTube. Join Mad Bitcoin's Twitter space if you want to chat. As far as I can tell, everything should be working. All right, we've got audio in the Twitter space, audio in the YouTube, and all the record buttons are all lit up. So here we go. Good morning, Bitcoins. Today is Thursday, November 10th, 2022. The price of Bitcoin is up 1.14% in the last 24 hours, with a last of 17,492. And Ethereum is up as well, 11% in the last 24 hours, with a last of 1,312. Checking out the Bitcoinal charts today. Looks like we're back in the sunshine. That's right, the price has gone back up a little bit after the recent disaster that we're all here to talk about. So if you'd like to join us in the Twitter space, please join us on @MadBitcoins Twitter space if you'd like to chat, or just hang out in the YouTube chat and send us a comment. It's 17,484. Looks like it's falling since we've turned the show on. And we're just here to talk about some of the unique and fun actions we've had in Bitcoin lately, maybe remind you guys of some of the ones we've been through in the past, and maybe this isn't so bad, you know? As Tur de Meester writes on Twitter, the reason our victories taste so sweet is because during the tough times, we stick it out together. Bitcoin and friendship both are earned over time. It's a nice thought to start off on. And I just want to remind you of the good times of FTX, even though I know that's far in the past. They did sponsor all of the Chinese fortune cookies. I can confirm to you that I got one of these cookies in both Las Vegas and in Sacramento, and they're definitely not the same Chinese food restaurant. So they must have went directly to the factory and gotten a deal with the fortune cookie companies to help advertise cryptocurrency. Unfortunately, it didn't turn out so well for FTX. But as the fortune says, try to live life one block at a time. And on the back, FTX, the company we're here to talk about today. Shout out to Bold, the Bitcoin credit card. They had a nice meme I've seen going around. Bitcoiners, while the whole crypto world is losing their mind. And it shows a picture of a meditative Bitcoiner rising above an angry crowd of crypto shitcoiners. That's a nice meme. As Tour says again, say what you want, but Bitcoiners know how to hodl. Tudor Jones, do you know that when Bitcoin went from 17,000 to 3,000, that 86% of the people who owned it at 17,000 never sold it? Drunken Miller, this is huge. Here's something with a finite supply, and 86% of the owners are religious zealots. That does sound kind of optimistic, yeah? And at last, we're going to read the news of the day, the big story. SBF, Sam Bankman-Fried, the owner of FTX Exchange, has posted a long Twitter thread. I'm just going to go ahead and read it. If you guys are watching on the World Crypto Network, you can follow along, or you can check out this tweet. It's on @MadBitcoins. And of course, it's at the top of Sam's Twitter account, which is @SBFFTX. Sam Bankman-Fried writes, I'm sorry. That's the biggest thing. I fucked up and should have done better. Number 2, I also should have been communicating more very recently. Transparently, my hands were tied during the duration of the possible Binance deal. I wasn't particularly allowed to say much publicly, but of course it's on me that we ended up here in the first place. So here's an update on where things are, according to Sam Bankman-Fried. This is all about FTX International, the non-US exchange. FTX US users are fine. Treat all of these numbers as rough. These are approximations here. FTX International currently has a total market value of assets and collateral higher than client deposits, moves with prices. But that's different from liquidity for delivery, as you can tell from the state of withdrawals. The liquidity varies widely, from very to very little. The full story here is one that I'm fleshing out every detail of, but at a very high level, I fucked up twice. The first time, a poor internal labeling of a bank related account meant that I was substantially off on my sense of user's margin. I thought it was way lower. My sense before, leverage 0x. USD liquidity ready to deliver 24x average daily withdrawals. Actual leverage 1.7x. Liquidity 0.8x after Sunday's withdrawals. Because, of course, when it rains, it pours. We roughly saw $5 billion worth of withdrawals on Sunday, the largest by a huge margin. So just to break this down a little, to go off of Sam's tweet here, what he's talking about is how many people were leveraged on the exchange. Now, remember, leverage is where you put in some of the money, you get to borrow more money, and then you get to gamble with that borrowed money. Leverage is the same thing that started the 1929 stock market crash. If you go back in your history books and maybe watch a black and white movie now and again, you would know that this has already happened before. In 1929, the markets were sky high. Everyone was doing good. And the reason they were doing good is because of this new thing they'd invented called leverage. You could borrow and you could gamble. It was like Vegas on steroids. And as Sam's saying here, he believed that his users, which is especially funny considering how Sam made his money on leveraging shitcoins, he believed that they had 0x leverage. Actually, his users had 1.7x leverage. The problem here as well is that they didn't have enough money to cover the withdrawals. At least they didn't have enough money in their hot wallet, which makes sense because, as we all know, you don't store all of your money in your hot wallet. You keep it spread around a little bit. As Sam is saying here, and so I was off twice, which tells me a lot of things, both specifically and generally, that I was shit at. And for a third time, in not communicating enough. I should have said more. I'm sorry. I was slammed with things to do and didn't give you updates to you all. And so we are where we are, which sucks. And that's on me. I'm sorry. Anyway, right now, my number one priority by far is doing right by users. And I'm going to do everything that I can do. Will he put in his own money? Question mark. To take responsibility and do what I can. So right now, we're spending the week doing everything we can to raise liquidity. I can't make promises about that, but I'm going to try and give anything I have if that will make it work. Allegedly, according to some YouTube videos, Sam has $22 billion. We'll see how that goes. There are a number of players who are in talks with LOIs, term sheets, etc. We'll see how that ends up. Again, commentary on this. Given that Binance has seen the books and they believe that they're anywhere from $4 to $6 billion at deficit, it's going to be very tough for anyone to buy or invest in this business. That's just my personal opinion. Every penny of that and of the existing collateral will go straight to users until or unless we've done right by then. After that, investors, old and new, and employees who have fought for what's right for their career and who weren't responsible for any of the fuck-ups. Although I don't know about that. If the employees didn't know about the leverage number, if they didn't build him a dashboard website where he could see what's going on with his investment website, I'm not sure what the employees were doing, but I can't tell from the outside. Because at the end of the day, Sam Bankman-Fried says, I was CEO, and that means I was responsible for making sure that things went well. I ultimately should have been on top of everything. I clearly failed in that. I'm sorry. And remember, isn't this kid about 22 years old or something? This is a young guy. Not sure how he got to this position. We'll talk about that more later, probably. So what does this mean going forward? I'm not sure. That depends on what happens over the next week. But here are some things I know. First, one way or another, Alameda Research is winding down trading. They aren't doing any of the weird things that I see on Twitter, and nothing large at all. And one way or another, soon they won't be trading on FTX anymore. And I'm not sure what Sam says at that point. It seems to drift off and goes into the comment section. I would like to know what you guys would like to hear about this. What would you like to say? I'm going to go ahead and invite up all the listeners. We don't have that many listeners right now. So if you guys want to share this on Twitter or retweet the original post, something like that would be a great way to get more people to check out this space and to enjoy this conversation that we're going to have. We've also got some commenters on Twitter. On YouTube. I'm reading those as well. So shout out to Ben the Bow, John M, Kenneth Moon, Tony Smith, and Pry C. Let's see what they're saying in the YouTube chat. John M starts out. He says, "Another entertaining week in crypto." Isn't that right? It's like the old Chinese curse. May you live in interesting times. And this is certainly an interesting time, right? Let's see. Tony says he's been around since Mt. Gox. There's nothing new with FTX. People giving exchange owners more intelligence than they deserve. And it reminds him, it says Sam Carpelli. So combining the two together, it does seem a lot like the Mt. Gox situation. I remember when I got into Bitcoin and there was really only Mt. Gox that you could trade at. And we went around and we tried to do some research, try to figure out, who is this Mark Garpelis that started Mt. Gox? What are his qualifications? And it turns out that he just bought Mt. Gox from another guy. I'm blanking on his name right now, but he went to start a lot of things like the Bit Loans and Steemit and all kinds of other projects. But he was a big crypto innovator, and he just sold the exchange to Mark Karpeles. So it wasn't even Karpeles that started it. This one, I do think Sam Bankman-Fried started it. It was a really strange story for me. And again, crypto's gotten so big, Bitcoin's gotten so big, I can't really cover all of it anymore. But out of nowhere, this Sam Bankman-Fried and this FTX exchange just came on the scene. I remember for me, one of the first big things about them is that they bought Blockfolio. And before that, Blockfolio was a pretty simple company. They just kind of keep track of your portfolio, and you could say, hey, I got 3 Litecoins and a Bitcoin and whatever, and it would tell you how much that would worth, and it would add up the dollar value or the yen value or the pounds or whatever. And it was a nice way to keep track of your money. But FTX bought it and turned it into the front end and actually their own app. The FTX app is just the Blockfolio app with a page or two where you can sign in and use FTX. So that was kind of shocking to me, but it was also kind of clever. If you think about the Blockfolio move, it might remind you of another move made by CZ, owner of Binance, when Binance purchased CoinMarketCap.com. Same kind of thing, a website that tells you the price of Bitcoin and other cryptocurrencies. But after it was purchased by CZ and Binance, obviously, they made it so there's a bunch of links on there where you can go buy these cryptos at Binance. Good for them, right? Good business deal. Buy an existing property and leverage it to help promote your business. The other reason that I heard about FTX was their incredible marketing campaign. Not just the fortune cookies that we showed earlier, but the sponsorships. FTX sponsored the crypto, they sponsored the arena for the Miami Heat basketball team for a short while, and I don't know how long that's going to last. It was named the FTX Arena. That's pretty cool. They also sponsored these fortune cookies, as I've shown you, and I think they're super fun. And as far as Major League Baseball goes, every umpire this season, and I think part of last season, wore an FTX badge on their chest. An incredible amount of marketing. Must have cost a fortune. And now look where it ends up. Another empty exchange. Your funds gone. Going to take a second here. Go ahead and invite up the Twitter audience. If you guys would like to join the show and speak, just let us know your opinions on the FTX collapse. Maybe it's no big deal for you, like Tony. You guys can join us here on the Twitter Spaces on @MadBitcoins on Twitter. I'm also checking out the chat on YouTube. So if you want to say hi on there, give us a like. We are simulcasting on Twitter Spaces and YouTube today. Probably going to try to go for about an hour or so, unless there's a lot of chat about this. But just want to talk to people, see how it's going. Maybe if you're new to Bitcoin, you haven't been through one of these things before, and you're saying, what's wrong? What's wrong with Bitcoin? Did it get hacked? Did it crash? Is there something wrong with the code? Is there something serious that I should be paying attention to? And sadly, once again, there's nothing wrong with Bitcoin. Bitcoin is just fine. The problem is the exchanges that people have built up around Bitcoin to trade it, to trade other cryptocurrencies are built by humans, right? Not by Satoshi. Satoshi, with his superhuman alien consciousness, knew that no one could be involved. No one could be controlling these things, right? That it would always end up badly when you have people that are setting the issuances, people that are creating their own tokens. It would always go badly. That's why he set up Bitcoin and left. He didn't set up Bitcoin and like a dozen other cryptocurrencies to compete with each other, or even a dozen different versions or instances of the Bitcoin software so that there could be confusion with each other and they'd have problems communicating with each other. He didn't set up either of those. He set up Bitcoin and he left. Let's see, we've got a comment from the chat. Shout out to Nisu Barisu. He says, do you believe the FTT token rebound in price since FTX USA is fine? I do agree. FTX USA seems to be fine. This is a similar situation to Binance and Binance USA, I believe, where, to my knowledge, nobody uses Binance USA, right? They all use Binance. So in this case, I think no one used FTX USA as well. Probably they had KYC and other things that are necessary to operate in the US market. Everyone was probably using FTX International. Now, as far as a rebound in the price, I'm not looking at the FTT token right now. Maybe I should pull that up. But there's usually a bounce at the bottom of these things. And for Bitcoin and Ethereum, we've certainly seen this kind of a bounce with a 2% bump on Bitcoin and a 12% bump on Ethereum. That doesn't mean that the trouble's over, right? Oftentimes, you'll have these little mercy bounces, dead cat bounces on the way down. And even though it's up now, when other people hear about this and they don't like the Bitcoin exchange situation, they might sell as well. So I don't know about investing or gambling and wagering with the FTT token. A lot of people do well day trading. A lot of people bounce right in and bounce right out of things and do fine. If you're one of those people and you're fast, maybe you could make some money on that thing. But if you're not and you're thinking about going slow or holding long, I wouldn't look at the FTT token. And I don't know about the price of Bitcoin and Ethereum either. Although it is nice to see a Fred Savage Wonder Years clapping gif here on good old Bitcoinal.com. Check out Bitcoinal.com for all your Bitcoin price needs. It's built by DJ Booth, the same guy that built Tallycoin, good old Tallycoin, and the World Crypto Network website and Mad Bitcoin's website. Let's check out some more of the tweets we've got ready. If you're on the Zoom chat, if you're on YouTube, you can see the tweets. Looks like Twitter Space is about dying out. No one wants to chat on Twitter Spaces today. We've got a great tweet and image by Beeple, famous artist. It says, damn you, SBF, FTX. And it's got a great image of Bitcoin cracking and crumbling with all kinds of cities and Athens and other things below it, with behind it the curly-haired fro of Sam Bankman-Fried. Excellent image by Beeple. It's kind of a funny image that I found yesterday and retweeted, as it says, Bitcoin EDU, a sad day for many. Hope this cheers some of you all up. And it says, are you making money on your investments? It has a samurai sword and he's pulling it out of the sheath. And it says, yes. And then if you scroll down, it says, yesterday, I lost a lot of money. Yes, indeed. That happened yesterday. But you also didn't sell, so you never really had that money. It was investment. There's a great image here of Squid Game, And the caption says, Sam, after losing most of his fortune and hearing that Binance is unlikely to buy FTX after reviewing their books. And it has the guy from Squid Game, and he's asking a photoshopped version of Sam Bankman-Fried. He says, "Why are you here? I thought you were financially stable." And always a good time. If you guys haven't watched Squid Game on Netflix, great show. A little violent if you're not into that, but very interesting commentary on being, rich, being poor in our society. And although it's tough for Western eyes to see it, quite a commentary on North and South Korea, the various groups, and perhaps even a distaste for each other. Check out Squid Game. Let's see, we've got another comment in the chat. John M says, the ICO collapsed last cycle, FTX, Luna, NFTs collapsed this cycle. What'll it be next cycle? I don't know. You have to think more technologies, like if Bitcoin or Lightning takes off in the virtual reality realm, it could be virtual reality or AR companies crashing next time. And remember, Bitcoin does seem to go through these cycles. Nothing goes straight up, right? Everything goes up and down and up and down. And if you're lucky, it keeps going up. So let me know in the chat, what do you think will collapse next cycle? We've already seen quite an interesting add-on effect here, kind of a knock-on effect where, as we know, FTX had a lot of funding, they had a lot of investors, and some of it came from banks. So the banks that invested in FTX, and it seems on the face of it, didn't do their due diligence very well, are now in trouble themselves. So for the first time, Bitcoin and crypto-related companies are crashing banks. Whoa. Let's see what else it says. We're going off the YouTube chat here. So if you guys want to leave us a message in the YouTube chat, we'll get to it. We're just going message at a time here, and it's great. Thanks so much for joining us. Give us a thumbs up. Subscribe down below if you haven't already. Looks like the Twitter Spaces is a total fail, so no one wants to talk with me. But I'll talk to you guys in the chat for a little bit more here. Let's see. Next, 2C says, the charts and resistance suggest Bitcoin is going to test the $12,000 range. He says, Bitcoin party song AMV on YouTube. Now stay aligned. So yes, 12,000, any of these things are possible. Remember, some of my friends have been suggesting and predicting these things based upon the chart, based upon us not going down enough. A lot of the Bitcoin crashes are a 90 or a 95% crash before an eventual recovery. So we only went down about 70%, which seemed really painful at the time, but it's nothing compared to 95%, right? Niku says, FTT is actually bouncing in price right now, lol. Well, it certainly is. And like I said, there are many of these day trader, speculator type guys, and respect to them. If you can make money, it's a hard game. And they are the kind that would be investing in FTX right now. They're also the kind that would be looking for this bottom in Bitcoin, this bottom in Ethereum, and it might even be a temporary bottom where they buy now, they get 5, 10, maybe 15%, and then they bop right back out. Those guys are smart. They're fast. If you're buying now and you're thinking that FTT comes back or that the whole exchange comes back, you're really a gambler. You're really a wild man. I don't know what's going to happen to your money. But yes, it's fun times. Q says, great show. Been following for a couple of years. On this FTX debacle, do you think that regulatory capital ratios and frequent proof of reserve snapshots will be a standard for CEXs going forward? I think CEX is a centralized exchange. I'm going to go with that. Do I think that regulatory capital ratios? I do think there's going to be more interest in this. It's interesting to me as a Bitcoiner, not a finance guy, that this company FTX was able to operate with so little oversight. That Sam himself didn't know the amount of leverage. Like I said, the employees didn't build him a dashboard, an easy to look at web page where he could track this, maybe with a chart too, right? Seems really simple. I don't know that they had that or didn't have that, but it seems that he didn't have this information according to his tweet. So I could see that be part of the regulations. Now, for this regulation thing in general, they can regulate the exchanges, right? They can't really regulate Bitcoin. The ability of you to send Bitcoin from one address to another address depends on the miners, depends on the nodes, depends on a lot of things that are outside the hands of US regulators because it's software. They could try to block the networks, they could turn off the internet. And then, as Andreas has said many times before, we could send around cat pictures and we could hide our Bitcoin transactions in them. They could even make a wallet that would automatically read in the cat pictures, make it easy for you. So I do think that Bitcoin is fine. I think that it's going to continue to be traded. It's going to be continue to be used, but these exchanges are the point. If you're an exchange operator right now and you're not in regulatory compliance, you're going to be brought into regulatory compliance. If you're an exchange operator now overseas, you might get a lot more business, right? A lot of people are going to be fleeing this regulatory compliance. So that is going to change the market. It is going to make it harder to invest in Bitcoin, whereas previously maybe you didn't have to put in all your information. Now you're going to have to put in all your information in triplicate, right? They're going to be very tight on this. Maybe withdrawals, 0-day withdrawals are not going to be a thing anymore. Maybe they'll just make you wait 3 or 4 days because they can. Stuff like that. I think that's the kind of regulation that we'll see on the exchanges, which will affect the market, right? It does affect what's happened recently in the last few years, I'd say, is that crypto and Bitcoin in general have gotten into this institutional money that we talk about so much. Institutional money. And we're all so excited. We're all happy because that drove the price up, right? All the institutions had to buy and none of them bought in the old days and all that because it was a drug money and it was a Ponzi scheme and a bunch of computer geeks. But now they were in, right? And the problem with these institutional money is that they're fair weather friends, right? The price goes down a little bit, they're out, right? They're not hodling. They're not here for the long run. This crazy thing happens. All the exchanges look bad. They wonder, are people going to be able to trade Bitcoin as smoothly as they did in the past? And the answer is no, not for the next 6 months, not for the next year or two, especially with the possibility of this regulation coming down on the exchanges. Remember, they can only regulate Bitcoin and crypto at the point where you're trading it for US dollars or at the point where you're trading it for other cryptocurrencies if you're not using a decentralized exchange. So that's where the regulation is going to be. It's going to affect the mood of the market, the mood of the traders. If people feel good about buying Bitcoin, if they feel bad about buying Bitcoin. I saw Crypto Duck or Alt Duck, I forget his name, but he's on Twitter. He's a duck and he predicts the price of Bitcoin now in the end. And he said he didn't feel like buying and he didn't know when he was going to feel like buying. He said if it went to 14, if it went to 12, it went to 10. He's just full of uncertainty about this market because of what these exchanges have done to us. And this is the saddest one, right? This FTX one. They were the regulated one. They were meeting with Congress people and senators. They donated to President Biden's campaign. They were supposedly on the up and up, right? They were so trusted. They were sponsoring sports venues and things like that. And that's always the worst, right? When the one that you trust who's on the up and up ends out to betray you, right? It would have been a lot easier to see someone like maybe CZ and Binance who, don't have a centralized location. They operate out of the Bahamas. They, have a lot of question marks about how they left Malta. You'd say maybe that guy's the one that's going to mess up the market. But it wasn't. It was partially him, but it was mainly this guy, Sam Bankman-Fried, according to the information we have right now, that there was problems within his company. There was over leverage and a lack of capital, seemingly from the tweets, and that this led to a situation where he attempted to get CZ and Binance to bail him out. CZ and Binance took one look at his book, and according to tweets on the internet, they said there's $4 to $6 billion gap missing, and that they are probably not going to buy the company because they don't know how they're going to make that money back. So it does look bad for FTX. It does look bad for centralized entities. Q in the chat agrees with me. He says, yes, that it's bad for centralized entities, but like Mad Bitcoin said, not for some of the underlying networks. Yes, the networks will continue. The miners will keep mining. The nodes will keep verifying transactions, and it'll keep being written into the blockchain. It's just a question of the value of Bitcoin. And all of this has to do with the how difficult it is to use Bitcoin scale. And I don't know if you guys have been listening for a while, but uh, back on other shows, I've talked about the idea that we are in a beautiful time for Bitcoin, right? Bitcoin is available, well, not everywhere, but almost everywhere. You can go to Coinbase relatively easily. I think you can even buy with your credit card now. You can buy with your bank account. You can get an app on the Apple App Store. There were times when this was not true, right? There was a time, everyone's forgotten, but there was a time when Apple banned all Bitcoin apps from the App Store, and you couldn't even install an app to become a new Bitcoiner if you wanted to. There was a time when Coinbase only sold Bitcoin. There was a time when you had to go to some weird exchange to get the altcoins. So, as far as access to Bitcoin, this is one of the easiest times to access Bitcoin, one of the easiest times to buy and sell and trade Bitcoin. And what's happening with this FTX situation is that it could change, right? That the exchanges are going to be more heavily regulated, which mainly has to do with their back ends, right? It has to do with their liquidity. Sam Bankman Fried, allegedly, according to his tweets, didn't know how leveraged his users were. It's pretty clear in the future they're all going to know how leveraged their users are, and there might even be limits on this, at least in heavily regulated markets like the United States. Beyond that, they could do kind of an international cryptocurrency regulation league, but I don't think we've gotten to that point yet. But I do think that will be coming eventually, where the United States and the EU and the UK and Japan and China, maybe all these countries come together and they say, hey, we need some standard rules for this cryptocurrency trading thing, because otherwise these guys are mobile, they move their businesses, their data's online, and they could be in another country tomorrow, right? Unless they work together, they're not going to be able to regulate these exchanges, but they haven't gotten to that point yet. Remember, governments, businesses, people like this, they work step by step. They're not looking multiple moves ahead here. They're just going to go step by step. So yes, in the short term, more regulations for exchanges. Let's see. Sroog in the chat says, isn't this super bad for crypto? A reason for regulators to make stricter rules? I do think it's kind of bad for exchanges, right? So if you're an exchange operator, you're going to have to do a lot more work. If you're investing in exchanges like my terrible Coinbase stock, which has just been awful, it's probably going to go down more, right? The idea that Coinbase or Kraken is going to make a lot of money without doing a lot of work is slowly going away, right? They're going to have to do a lot more work to make their money at the exchanges. This doesn't really affect Bitcoin, doesn't really affect any of the top 10 cryptos. They're still going to keep doing what they're doing. If you believed in them before, no reason not to continue believing in them, whether it's smart contracts or NFTs or whatever they're doing. Those things are pretty much unaffected unless they were relying on these exchanges. Now, there are some ways, especially with the altcoins, where they do rely on the exchanges. Like, for example, if FTX had put, I don't know, say $2-3 million into an Ethereum development fund, well, that money's not coming back next year, right? If FTX was developing Solana or involved in Solana and they were funding it, that funding's not coming back next year, right? So for these kind of operations where it's mainly about people being paid and mercenaries, they could be affected. But if you look at the Bitcoin programmers, if you look at the people who talk about Bitcoin and tweet about Bitcoin, for the most part, they're not directly paid by an exchange. So as long as you weren't reliant on this exchange money, like you don't see any ads here, FTX, and it pops up and it dances it around or anything, we don't seem to have any of those here. So we're not really affected by that right now. So I can keep making shows and it's going to be fine. We're going to do the Bitcoin group tomorrow. We're going to discuss this issue. I don't want to ruin it for tomorrow's show, but I did also want to check in with everybody, see if you guys are doing okay, see if you lost too much money, if you're stressed about it. The same thing, and we've said this before, and it seems kind of flippant or whatever, but it's always important to know that if you need help, you can contact one of those suicide help hotlines. There are a lot of people that can talk to you and they can talk you down. And I know it's a big deal. We've all lost a lot of money. Some of us, over invested. Some of us didn't take profits at the top. A lot of people probably didn't listen to the dollar cost averaging advice that everyone I know says, and then nobody follows. So once again, if you were dollar cost averaging, you would just buy $100 a month, and the $100 that you buy this month, you'd get a lot more Satoshis, right? Maybe if you were going to get just say average, if you were going to get a 0.05, or if you're going to get a point 0.1, maybe now you get a 1.5 or a 0.15, sorry. You could get more Satoshis. You could get more Bitcoin for your money, which under dollar cost averaging will work out later in the end. So you made a bunch of bad buys the last few months. You'll make some good buys these next few months and it'll average out. Of course, nobody does that. Everybody just runs in, puts all their money in, and then when it crashes, they pull all their money out, and then when it goes back up, they put all their money back in, and they just try to chase the market and they try to time the top. They're like, I'm going to be the one who gets the bottom perfectly. And I'm here to tell you from experience, you're not going to time the top. You're not going to time the bottom. You're probably going to miss it. If you have a more flexible strategy, which I know is more difficult, if you're putting in like 10% a week, if you're putting in 20%, trying to find that bottom, you're going to have different buys that are going to average out, that are going to get you a better result and a lot less stress than trying to time the bottom or trying to time the top. You can watch all the chart guys you want, but none of them really know where the bottom or the top is until the next day. The next day, they're always like, that was the bottom, that was the top. Did you buy? But when it's actually happening, no one really knows. So investing smaller with dollar cost averaging, or even 10% in, 10% out, that kind of thing can give you a better result. Not financial advice. Everyone needs to do their own thing. You make up your own mind. Don't listen to me. Read a bunch of sources. Let's see. Crypto Player says FTX US is Seifu. Yes, Seifu. Good old CZ and his line. It was pretty interesting. Again, only Kraken, to my knowledge, actually provides cryptographic proof of reserves. They have Merkle trees and things that you can click through and follow, and you can see how much they have in their reserves. Let's see. Niku says, this looks like the start of the bull market to him. So it could be true. We are seeing an uptick in the prices. Bitcoin is up 4.5%. It was up around 2% when we started this show. So once again, maybe this show makes the price of Bitcoin go up. The price of Ethereum is up 15%, 1337. That's elite. Mateo Lewis writes, he says, seeing everyone freaking out about FTX makes him think that the bear market is over. It's interesting to say because we kind of decoupled from the price charts here, right? If you were looking at the price charts and you had your triangles and your Bollinger Bands and your Fibonacci numbers and all your price spirals and everything, and then an event like this happens, you pretty much have to throw those charts out, right? Because it's not because of the price collapse that this happened. This happened because of Sam Bankman-Fried, right? This happened because of the way he ran his exchange, which had a fractional reserve, seemingly, allegedly. And then the fractional reserve, he went to help for Binance, who is one of his major investors. Binance seemed to not like this, not like him as well. There's a bit early on where it seemed, and again, we really only know what these people tweet about this stuff, but it seemed from CZ's tweets that Sam Bankman-Fried perhaps had lobbied against Binance. Sam Bankman-Fried goes to all of his political friends, says, hey, you need to support FTX because we're a good exchange. Don't support a bad exchange like Binance. I don't know what the details were. I imagine it was something like that. And of course, CZ, a major investor in FTX, was like, whoa, what are you doing? Biting the hand that feeds you much? I give you all this money. I let you start an exchange. And CZ gets a little wiggly, starts to mess with the FTT token, the token that apparently backs FTX. And the FTT token starts going down. Then we learn about this liquidity problem inside there. Then CZ gets to look at the books. And then CZ says, whoa, even we won't buy this thing. And that's pretty much where we are from the outside, looking at Twitter, trying to understand and interpret this like everybody else. I think the only ones who really know what's going on are CZ and Sam Bankman-Fried. And the rest of us are just reading their tweets. Crypto Dummy says, not your keys. It's simple like this. And it was funny to see several people referencing good old Trace Meyer and his not your keys, not your coins campaign. which every January 3rd, I think it was, which is a hard day for exchanges because a lot of them are on vacation. He says everyone should take their money out of the exchanges and see what happens. And it always seemed like an idea to cause a liquidity crisis in the exchanges and to cause a run essentially on the banks. And that was a little wild, right? Trace is a little out of control there, but his core idea is right. His core idea is correct. Why should we leave our funds in these exchanges? Why not take them out for a day and put them back in if you want to? Just make sure they have the money. Remember, there are only 21 million Bitcoins, but once your Bitcoin goes into a black box like Coinbase or FTX or even Binance, you don't really know how many Bitcoin they have. Sure, you and your buddies all gave them a bunch, so they should have, say, 20, right? But if they take those 20 and maybe take 5 of them, put them out there and start gambling with them, you have no idea, right? And what's great about the kind of gambling operations they can set up now is they can keep the money on the exchanges. A long time ago, I worked for a startup called BTC Jam, and we did Bitcoin loans. And it was everyone tried our best. We tried our best. It didn't work. And one of the big mistakes, or whatever, looking at it in hindsight, of course, was that at BTC Jam we let you take the money off the exchange. We weren't a cryptocurrency trading platform. What's great about these trading platforms is that they can keep the money on the exchange. They can let you gamble with it. They can even juice you up with the leverage, which works good sometimes. But if the market goes the other way, woo, gone, right? Your stuff's gone. So this leverage thing, they keep the money on the exchanges. It usually works out better for the exchanges. In this case, it seems that SBF's customers were over leveraged, causing a discrepancy in the books where suddenly FTX doesn't have as much money as they're supposed to. And that's in the billions, according to that. So let's see what else we got in the chat. Next 2C says, that's because Beyond Meat stock was crashing because the CEO tried to eat somebody's nose. That is funny. So I think he's talking about, because Bitcoin is really not related to SBF and to FTX. Bitcoin is its own thing. And the Beyond Meat stock, they actually went down recently because they've been having sales problems, not just because the CEO tried to eat somebody's nose. There was another CEO recently, I think it was Tyson Foods. Strangest story ever. I really don't understand it. I'm just reading the news on the outside. And the guy said he was intoxicated and he went in the wrong house, got into the wrong bed and went to sleep. And he's like a major executive at Tyson Foods. So again, I suppose the chicken's okay, but you got to worry about the executives. It's very strange. Shout out to Crypto Dummy. He says in the chat, Trace was a hero. And I too am a big fan of Trace Meyer. I wish he didn't have to disappear. That was a bunch of nonsense. For you guys who don't know, Trace still has a bunch of podcasts out there. You guys can go listen to them. He was a lawyer. He was early into Bitcoin, and he was very logical in his thinking. He was always talk about the network effects of Bitcoin. And we talk about basically the size of Bitcoin. And because of the size of Bitcoin, because of what it can do, because of the ways that it can't be challenged, we used to talk all the time about which countries could buy enough Bitcoin to crash Bitcoin. And now it's down to just a couple, right? Pretty much the US and China, maybe the EU could do a major action against Bitcoin, but the rest of them, it's out of their reach. And Trace was great. He also had the not your keys, not your coins. And he had that day, January 3rd, where we're all supposed to pull our money out of the exchanges just to see if they have it. And I know that pisses off my buddies who work at exchanges, and they say, hey, we have to get special staff in. We have to do our cold wallet, because it also tests the exchanges in the way that the exchange should be set up, right? The exchange should have most of their money in a cold wallet. So if they have a mistake like Bitfinex, where they just start allowing withdrawals because they got hacked, they can't be robbed for all of their money. They can only be robbed for what's in the hot wallet. In the same way, SBF talking about his company, how they do have the liquidity according to his tweets, but they don't have all the liquidity in their hot wallet. So they were unable to let people take the 5 billion or whatever they wanted the other day. So it's still discovering, still happening. We'll see if customers get their funds out or not. Crypto Dummy also says that Thomas is a hero. Thank you, man. Good stuff. and you're just trying to hang in with this thing. It's been up and down. Certainly, I'm down as well. I bought the Bitcoin, so we just got to see how it goes. And as it is today, since we've turned the show on, we are up around 3%, $520 with a last of 17,809, a high of 17,956, and a low of 15,588. Volume's pretty high with 25,000 Bitcoins trading hands. The market cap's at 341 billion, and it's down 7% in the last 30 days. It's down 73% in the last year, and we have actually seen some shorts start to open up. Previously, this was around 98% long. Now it's 94% long with 6% short. So people are trying to take advantage of the Bitcoin market and get their shorts out there. Let's see what else we've got going on here in the Twitters. This is an interesting story. According to Wartime Micro Chad at Ghosts of MTC, it says, looks like Kevin O'Leary TV, Kevin O'Leary, Mr. Wonderful from Shark Tank, had a cool $1.02 billion tied up in FTX official. The wonder in Mr. Wonderful apparently refers to him wondering where all his fucking money went. Uh-oh. Could be trouble for Mr. Wonderful. I saw him at a Bitcoin conference recently. Actually, it was a Web3 conference. No one ever says the word Bitcoin. But yes, he was very happy with himself. He said all over and over again, he had the most interesting refrain. I hadn't heard it since 2014. He said, we need more regulation to allow the institutional players to enter into crypto. I said, really, Mr. Wonderful? Are you sure? More regulation? Haven't we done this before? But that's what he was all about. And he said now in this tweet, it says, a bottom is usually created when there is a catastrophic event, like a large player going bankrupt, or somebody who's in deep trouble for buying crypto on over leverage. Ironically, Kevin is an FTX investor and also a spokesperson for the exchange. So in that way, according to Kevin O'Leary, who is definitely an expert in investing and so forth, has way more experience than I do, he says this could be the bottom because of the large collapse caused by over leveraged individuals on FTX. I wonder what will happen to Mr. Wonderful's $1 billion. As of right now, without the CZ Binance company coming in to bail out FTX, there's no government insurance on crypto exchanges. There's government insurance on bank accounts called the FDIC. It came out after, in the New Deal by FDR and so forth, and that insures your bank accounts for a certain amount. I think 100,000, maybe 250,000. So if the bank goes bust, you would get covered. Unfortunately, FTX, though it seemed like a bank and it seemed on the up and up, has no such backup plan. So it is possible that Mr. Wonderful would lose his entire $1 billion. He might also get a percentage cut of the return if they find any funds, if FTX owned anything, if they need to sell their real estate portfolio or whatever. It's likely he would get a cut of that in the lawsuits later, which also means lawyers would take a cut of his money. Shout out to Crypto Dummy in the chat. He says, it's okay, Thomas. It's only noise. And he says, strong hands, like good old Adam Meister used to say all the time. And he asks, where is Vortex? I'm not sure. Vortex went off, made his own network a few years ago. And after that, I think he went to move and to work in electronic music. So I'm not sure why he's not releasing the electronic music on his Twitter and to his Bitcoin friends, because I would like to see that. I'd like to hear that, But yeah, best of luck to Vortex. I hope he's doing well. If he's out there, sure you could chat and call in. I'm gonna just take a sweet water break, like that guy says on YouTube. Patrick CC says, "Stay hydrated." Oh, water. Can't beat it. It's the best. Crypto Dummy's got some more in the chat. He says, insurance doesn't exist in life. And that's true. You do have to take risks. And the people who put their money into FTX took a risk, and it doesn't look good for them. Autism Capital at Autism Capital writes, apparently Michael Lewis, famous finance writer, the author of Moneyball and The Big Short, a great writer, was writing a book on the success of FTX. He was at the Super Bowl with them and made multiple trips to the Bahamas to cover it. Looks like he just got his ending. It is very interesting. I also saw another tweet that talked about the competition in books coming up. It said that Walter Isaacson, author of the excellent Steve Jobs biography, which I read, and the Albert Einstein biography that I'd like to read, is doing a biography on Elon Musk, which would be very interesting, especially during these turbulent times. And he was kind of, in a way, in a competition with Michael Lewis, who was doing a book on FTX and Sam Bankman-Fried. It looks like Michael Lewis just won. Although the Elon story is also very fascinating, depending on how much access Mr. Isaacson has to Elon. Shout out to Bitcoin Hat Guy, bitcoinhatguy.com. Mad Bitcoin says, these are the best Bitcoin hats. I'm wearing one right now. It's got a stitched in Bitcoin logo on it. And you can check them out at bitcoinhatguy.com. You can even pay in crypto, or if you don't want to, because it's down right now, you can pay in PayPal. So support my friend. He's been selling Bitcoin hats since 2013. As he says on one of these tweets, he says, Bitcoin Hat Guy has been around since before Mount Gox. So that's pretty cool. And I've been buying my hats there from him for years now. Shout out to Andrew Callahan from Channel 5 News, and before that, All Gas, No Breaks. He does a fantastic YouTube channel. He interviews people, and he really lets them talk. And if they're morons, you find out because they run out of steam. If they're clever, sometimes they say some really clever things, and then Andrew can talk to them and bring that out more. He did a lot of really great interviews and things, especially during Ferguson, after the George Floyd situation and with the protests and so forth in the street. Andrew was there. There was flaming buildings going on behind him. He went into one of the buildings and just continued to interview people, ask them questions about what they thought, why they were there. And it was really neat. I got to meet him here in Sacramento at the Crest. And it was really cool to see Andrew from Channel 5. Checking in again with the price of Bitcoin. It is up 3.86% with a last of 17,862. Ethereum is up 12% with a last of 1,334. How are we doing on the timer? We're at about 55 minutes, so we got about 5 minutes left. Time for a last comment or two. If you guys want to put it into the chat, I'd be glad to take another question. But pretty much we're going to head towards the end of the show. Just a couple other things. I have some kind of art on my wall here from the bear whale. And it's hard for anyone to remember, but way back in October 2014, one of the artworks has the date written on it. That's convenient. There was a guy that was tired of Bitcoin. He'd had enough. Maybe he bought it when it was worth nothing. Maybe he was bummed because it went down from like 1,400 to 300. But this guy was done. And we call him the bear whale. And he sold all of his Bitcoin at $300. So there's this line on the Bitcoin chart. I'm going to see if I can pull it up here. Of course, we're searching the open internet. Horrible things could happen. But let's see if we can get the things here. So the bear whale sold so much Bitcoin. Here's one of the arts I have right now. And so much Bitcoin that the price just went sideways. The price just went sideways for it seemed like a day or two. So if you can see right here, the wave pattern that the artist has used is the Bitcoin chart. So you can see this straight downwards spike here. That's the arm of the bear whale going through. These breakouts are the price going back up. But pretty much Bitcoiners had no choice to do just to buy the Bitcoin. As it says here, 8 years ago today, by Jamie Redmond, another friend of the show. This was from October 6, 2022. So just is this today? Is this fresh? I don't know. Can't get any clocks. Oh, there's November. So this is from a month ago. Still very fresh. It says 8 years ago today, Bitcoin traders slayed the infamous bear whale who dumped 30,000 Bitcoin in a single trade. So this guy just went up to the market. He said, I have 30,000 at $300. That's a lot of money. And I'm going to take it. It's $9 million. Oh, is it $29 million in a day in global trade volume? He sold the coins at $300 a coin. He was looking to obtain $9 million from the sale. Today, those Bitcoins are worth roughly $603 million. So the bear whale was wrong. There's a lot of great art that came out around this. You can see here the slaying of the bear whale by Christopher Edwin Steiniger. Very realistic with a Bitcoiner waving the flag. Also here we had this great one I can tell from the wall, The Bitcoin Bear Whale by Billy Mabry, October 2014. So we have been through this kind of stuff in crypto before. Lessons learned from the bear whale. And again, $603 million, and he took a measly $9 million. So this has happened before. We've seen Bitcoin go down before. We've seen other things go down before. But we just keep a positive attitude. And as FTX said in their famous tweets and their famous fortune cookies, just try to live life one block at a time. So thanks again to everybody for joining us. Give us a thumbs up and a share. If you'd like to watch this show again, maybe you're just getting here at the end, you can go to worldcryptonetwork.com. We've got lots of other shows like this. We've been making YouTube videos since 2013 about Bitcoin. Always hold your own keys. Don't keep your money on an exchange unless that's your trading money. And even then, a lot of people used to check in and out. They used to take even their altcoins off the exchange at night. They'd be like, well, it's just not safe. Just don't know. So thanks to everybody in the chat for hanging with me. We had a good time. Just wanted to check in with the community, see how you guys are doing. Now I'm going to try to gracefully end all of the various things. So goodbye to Twitter Spaces, and goodbye to everybody else. And we'll be back again tomorrow at 12 noon Pacific time for the Bitcoin group. It's pretty much like me and some other people talking about this. I'll talk about some other issues as well. Thanks so much for joining us. Until next time, bye-bye.